In this slide, we are going to look at the differences and similarities of money laundering and terrorist financing. Money laundering crime is committed for financial gain. The primary motivation for terrorism, however, is not financial. Rather, terrorist groups usually seek goals such as publicity for their cause and political influence. Criminal activity produces funds and other assets that traditional money launderers must disguise by taking large cash deposits, enter them into the financial system without detection. Whereas a significant portion of terrorist funding comes from contributors, some who know the intended purpose of their contributions and some who don't. Mostly the source of fund is legit. Generally, money laundering involves large cash that is broken down in small chunks and then moved around. Whereas in terrorist financing, money comes in smaller portions and then EFT'd in larger portion to the terrorists. Another important fact is that terrorist financing, because the terrorist operations require relatively little money, the terrorist financiers need to place relatively fewer funds in the hands of terrorist cells and their members in order to carry out their objectives. This is a significantly easier task than seeking to disguise a larger amount of proceeds generated by the drug traffickers. The similar objectives in money laundering and terrorist financing of masking financial resources and activities from the scrutiny of state authorities and occasional use of similar techniques results in the two activities being examined with the same lens. With the common objective to avoid audit trails and reporting requirements, terrorist financing uses identical methods of placement, layering, and integration to move money to support terrorist activities as those used for moving and laundering money for general criminal purposes. Money laundering and terrorist financing activities can threaten the integrity and stability of financial institutions and systems, discourage foreign investments, and distort international capital flows. In an increasingly interconnected world, the problems presented by these activities are global. Key to combat money laundering and terrorist financing is raising awareness amongst mass. Money laundering and terrorist financing are global problems and as such should be tackled with globalized policy. There are various organizations that play important roles for global action against money laundering and terrorist financing. The Financial Action Task Force, FATF, is a 36-member intergovernmental body established by the 1989 G7 summit in Paris. It has primary responsibility for developing a worldwide standard for anti-money laundering and anti-terrorist financing. It works in close cooperation with other key international organizations, including IMF, World Bank, United Nations, and FATF-style regional bodies called FSRBS. As a collaborative institution with near universal membership, the International Monetary Fund, IMF, is a natural forum for sharing information, developing common approaches to the issues, and promoting desirable policies and standards, all of which are critical in fight against money laundering and financing of terrorism. The World Bank works closely with the International Monetary Fund on these programs and has made anti-money laundering and anti-terrorist financing support for client countries as a part of its financial sector development strategy. The bank also supports efforts to establish international standard response led by the Financial Action Task Force on Money Laundering and in development of the FATF's 40 recommendation which serve as a framework for AML efforts. Money launderers and terrorists exploit both the complexity inherent in the global financial system as well as differences between national anti-money laundering laws and systems. They are especially attracted to jurisdictions with weaker or ineffective controls, where they can move their funds more easily without detection. Moreover, problems in one country can quickly spread to other countries in the region or in the other parts of the world. Strong anti-money laundering and anti-terrorist financing regimes enhance financial sector's integrity and stability. which in turn facilitate countries' integration into the global financial system. The integrity of national financial system is essential to financial sector and economical stability both on a national and international level. Money laundering and terrorist financing are global problems and need to be solved collectively at the international level. Deny dealing with an anonymous client who you are not able to identify properly or for whom you are not been able to collect enough information to establish a business relationship. This client could be a corrupt politician, a designated terrorist, or a drug mafia. World is increasingly recognizing the importance of ensuring that their financial entities and other designated non-financial entities have adequate controls and procedures in place so that they know with whom they are dealing. This is necessary not only to comply with the anti-money laundering legal requirements, but from a wider prudential perspective. Adequate due diligence on new and existing customers is a key element. Without this due diligence, organizations can become subject to reputational, operational, legal, and concentration risks, which can result in a significant cost. To guard against these risks, organizations must develop policies and procedures in key areas such as client acceptance, customer identification, ongoing monitoring of high-risk accounts, and risk management. Now that you know the importance of sound client identification and monitoring programs, who should you report if you suspect that your client is laundering money? Most countries today have specialized centers called Financial Intelligence Units (FIUs) that collect and analyze information provided to them for the financial crimes. Let's now see a little background history on how these FIUs were created. As countries developed their anti-money laundering strategies and found that the law enforcement agencies had limited access to relevant financial information, a clearer strategy was developed. This strategy emphasized on engaging financial system further by requiring them to disclose suspicious transactions. This further required a need for a center office to access and process these disclosures. This led to the establishment of first few financial intelligence units, FIUs, in the early 1990s in response to the need for a centralized agency to receive, analyze, and disseminate financial information to combat money laundering. Today, there are more than 100 FIUs around the globe. Financial Intelligence Unit, an FIU, quite simply is a centralized office that obtains financial report information, processes it, and then discloses it to an appropriate government authority in support of a national anti-money laundering effort. FIUs are able to provide a rapid exchange of information between financial institutions and law enforcement, prosecutorial authorities, as well as between jurisdictions. They also protect the interests of innocent individuals contained in their data. In this introductory episode, we just looked at the money laundering and terrorist financing crimes, briefly talked about their impact and the regulations on a very high level. I am aiming at bringing to you in separate topics the requirements under AML ATF in detail. My next episode would be to look into the customer due diligence, what is a satisfactory CDD program, and how much information about a client is enough information. I hope you enjoyed this session and see you soon.